Welcome to the Rumi Forum Luncheon. Good afternoon. I am Ziad Al-Haddad, former Director of Operations of the World Bank. I am very pleased to introduce today our speaker and guest, Branko Milanovic. He will share with us his thoughts on a very important subject, which I'm sure is of great interest to the audience here, as well as our viewers at home, and that is the subject of global inequality. He will help us understand the concept, how it is measured, some of its trends and its implications. He will also discuss the divergence in countries' GDP per capita, which is an important driver today of the migrations which take place in the world. And he will also reflect upon the effects of the current global economic crisis on global inequality. Now, this is all the more important because I don't know how many of you know, this morning an op-ed has been released in the press by President Obama, which in fact indicates that the global crisis today and America's crisis is inextricably linked to the global crisis. And the solution is going to be global, and he's looking forward to support from the rest of the world to resolve this crisis, which makes this discussion even more important. Now let me tell you a few things about Branko. He is the lead economist in the World Bank's research department. He is a senior associate at the Carnegie Endowment for International Peace in Washington, an adjunct professor at SAIS, Johns Hopkins, and a College Park professor at the University of Maryland. He has a PhD in economics on income distribution, as it happens, from the University of Belgrade. He has several publications to his credit. He is the author of many articles on methodology and empirics of global inequality, effects of globalization on poverty and social policy in transition economies. His main publications which relate to the topic today are three main ones which I will recount. The first is the Income and Influence, Social Policy in Emerging Markets, published by Upjohn in 2003. The World Bank publication of 1998, which is entitled Inequality and Poverty During the Transition from Planned to Market Economy. And his most recent book on the subject, which is entitled Worlds Apart, Measuring International and Global Inequality, Princeton University Press, and which is in fact the book on which he will be talking today. So let's get straight to the discussion, Branko, if I may. Sure. And let's start with a few basics, because when I was introduced to the subject myself, I thought it's very simple. But when I go through the intricacies of it, it's indeed a subject which warrants a lot of thought. So let's start with the definition of global inequality, how it's measured, what are the sources of data, how serious is this inequality in itself, and what are the trends, increasing, decreasing, or is it keeping constant? Please.
Sure. Thank you very much, Ziad. First, let me thank you for the very nice introduction. And of course, let me thank everybody and of course, Rumi Forum for inviting me here. It's obviously my pleasure to be here. And I think we were actually going to discuss, as Ziad said, a very important topic, which I think to some extent is in everybody's mind. And yet, it is a topic which is very heavily empirical. So relatively few people sort of know the data and the details about the topic. So what is really important is that to broaden or to convey more information about global inequality. So let me go to the questions. First, excuse me. First, what is global inequality? Global inequality is inequality between world citizens. So that means that you basically take the world as a single entity, and instead of doing as we normally do inequality within each individual country, we treat the world as if it were one country and try to find the total inequality between people. Well, this sounds relatively easy, at least conceptually. We treat the globe as one. Every citizen comes with his income. Now, the problems are manifold, and I will not go through all of them, but let me just tell you two most obvious problems. First, in order to know that, we would actually need to have a world survey of incomes, of households. We don't have that. So we actually get the world distribution from country surveys or actually country distributions. So in other words, you obtain the whole world as a combination, collation as it were, of country distributions. So that's the first problem. So you have to have really 100 country distributions in order to say what is the world distribution. The second problem is how do you convert incomes? So you have people in India with incomes expressed in rupees, people in Russia in rubles, people in US in dollars, people in euro in euros, in Zambia in kwachas. How do I convert all of that in the same unit? There are two possibilities. One, I convert it at the market exchange rate. Well, that's not a very good one because we know that price levels in poorer countries are lower than in rich countries, and we are interested in welfare. So then we have to actually depend on another huge project which takes place every 10 or 15 years in the world, which is called the International Comparison Project, which produces price levels for each country. So really, in order to find out global inequality, you combine two huge databases. On one hand, more than 100 countries with their micro data on incomes of individuals, and on the other hand, this large economic, probably the largest single economic study ever conducted in the world, which is finding price levels from all these countries. And then you put these two things together and you generate the global inequality. So what seems at the beginning so kind of straightforward, as you can see from that short description, really becomes a huge, very data-intensive project. Strewn with many assumptions, possible errors, issues, and so on, but I will spare you those. Now, as Ziad asked me, how big is this global inequality? Here the problem is, of course, that we might actually express that in different units, but I will use the one which is most commonly used, and this is the Gini coefficient. Now, to give you an idea, the Gini coefficient is a measure of inequality. So if it is a higher number, then the more unequal the society. That Gini coefficient goes the minimum, I mean, it goes theoretically from 1, when everybody has the same income, from a theoretical maximum of 100, where one person has the entire income of the country. Now, in the real world, of course, the minimum number is around 25 or 30. The maximum number is about upper 50s, lower 60s. To give you an idea, countries like Finland, Czech Republic would be at 27, 28. That would be the most equal countries. Country like Brazil or South Africa would be at 60 or 61, the most unequal. If you're interested in the United States, I'll give you the number there. It's a 40. It used to be 30 or 32. It's now 40. So over the last 25 years, as we know, inequality has gone up. And I'll give you another trivia factoid, is that think of the world sort of in a east-west or west-east dimension. Gini coefficient in the United States is currently around 40. Gini coefficient in the new expanded European Union is around 40. The Gini coefficient in Russia is around 40. And the Gini coefficient in China is around 40. So it's easy to sort of remember that. Now, how about the world? Well, the Gini coefficient for the world is 70. So that has never been seen in any individual country. So it is actually obviously much higher than in any individual country. And to give you, and I'll finish with that, another illustration of this, it is something which I called maybe somewhat ironically sort of brotherly distribution of income. It's brotherly in the sense that 1/2 of world income is received by less than 10% of people. And another half is received by about 90 to 92% of people. So this is the distribution of world income corrected for the lower price level in poor countries. If it were uncorrected, then of course inequality would be even higher, but we corrected for that. So in other words, basically another way to remember is 10% of income in the world, 10% of people in the world receive 90% of income, and of course 90% of people receive 10.
Branko, thank you very much for that. Let's move on to the links with globalization. Now, many people say that globalization increases inequality, but there have been arguments which are quite the reverse. What is the truth here? Are there any linkages really, and where do we come out on this?
It's a very good question. It's a very difficult question. So if you thought that actually this explanation of how you calculate is difficult, and it is, then the causality between globalization and global inequality is even more difficult. And I actually even think that it's impossible to answer except in a contingent or contextual term. And I will try to explain what it is. The question has attracted lots of attention because, of course, we are now experiencing a period of 20 years of globalization number 2 or globalization number 3. And at the same time, we have noticed that in many countries in the world, as I mentioned before, inequality has gone up. So there is this general feeling, you look at China, inequality has gone up when China opened up, inequality has gone up in the United States, in the UK, even in India, so many, Russia, so many countries it has gone up. And then, on the other hand, globalization is also related to a very significant growth of the 2 largest countries in the world, China and the United States, China and India. And basically, when you think of global inequality, to simplify, it really depends largely to the triangle of these 3 countries, how they develop in terms of growth rates and in distributions, US, China, and India. So China and India being poor, having grown fast, are reducing global inequality. So there we have really two different factors which affect global inequality differently. One is widening national inequality in response to globalization. So this is what often people think, okay, so globalization and inequality are linked because we see income inequality in most countries of the world going up. But then when you move to the global level, you have to account also for different growth rates of different countries. If poor countries grow fast, like China and India, then they reduce global inequality because many of these poor people become richer. Mm-hmm. So then this is the second effect, if it's related to globalization, that actually then reduces global inequality. And then there is a third effect, which we don't know exactly which way it works, is that globalization may be particularly good, possibly, for very populous countries or very small countries. So when you put all these 3 effects, really the overall, the outcome may go one way or the other. In other words, it could be that actually now with China and India growing so fast, that positive effect dominates the negative effect of within national inequalities. But it could be also that within national and global inequalities, and of course big differences between many of the poor countries that have actually declined and not done well over the last 20 years, even if they're relatively small, overwhelm the positive effect of India and China. So basically, I think one has to be very circumspect in saying that, saying what is the effect, because the channels of influence are so numerous, at least there are 3 or 4, and they often go in the opposite directions. So the overall impact that you get might in one period be slightly positive, in the other period slightly negative, unless you happen to have a very unlikely coincidence of events where actually everything works in your favor. In other words, if globalization were to reduce all within national inequalities, if globalization were to still keep China and India growing fast, if globalization were to make all the poor countries in Africa grow fast, well, then of course it's easy to say it would be positive, or the reverse. But when these effects are different, then it's very difficult.
Well, I think you do point out the complexity in this issue. It's not a straightforward thing in which we look at what we feel is going to be correct. You really got to study the figures and facts and figures before you launch into globalization, perhaps. Go into the schemes. Yes, certainly. Could I just change the subject slightly in as much as the question of location and class? A century ago to something else, and today, which of these two are more important when it comes to inequality?
Well, this is one of my favorite questions, so I'm very glad that you asked it. You know,
excuse me, what do you mean by location and class?
It's where you were born or where you migrated to.
Right.
Is that more important, or is the fact that you are, in a certain class within a certain country or a community?
Exactly. So it's basically when we go back to about 150 years ago, and however these data are shaky, but we do have some data. We can calculate global inequality and break it down into two components like we didn't do now. One component, by the way, global inequality then was lower than it is now, so we know that. But one component of that global inequality is inequality because of differences in mean incomes between nations. Another component is inequality within nations. Now, it so happened that if you go back to 1850 or 1870, most of inequality in the world was due to inequality, what you can call class. In other words, you were born or lived in a poor class in England, or a poor class in Turkey, or in poor class in China. And your incomes did not really differ that much. Or, alternatively, you were born rich and lived rich in England and so forth. And the differences between mean country incomes were relatively small. The difference between the Netherlands, which was the richest country in around 1820, 1850, and China was 3 to 1. Sometimes people say 3.5 to 1. But it's not much. I mean, today the difference between US and China, despite all the growth of China that we are sort of delighted and talking, the difference is 10 to 1. And this is in PPP, adjusting for the difference in price level. Just to remind you, that means for the global inequality, for China to keep the absolute distance with the United States unchanged, China needs to grow 10% every year if the US grows 1%. If US grows 2%, China needs to grow 20%. So, the distance is very big between these two countries. In the past, it was not the case. So in the past, most of global inequality was due to your class in your society. Well, nowadays, it is totally reversed. Nowadays, 80% of global inequality is due to the fact that people live in countries which are either poor or rich. And if you are a poor German, you are richer, the poorest group of Germans are richer than 77% of the world. And if you are, like for instance, in rural India, then the richest group of like 1 or 5% of richest rural Indians are poorer or about the same level as the poorest Germans. So in other words, now it's really the location which is a determinant of overall inequality and also of your own income. Because maybe for you it's more important now to be a citizen or to be born in a rich country than whether you're really born in a poor group or middle income group. Or obviously it's better off, you're better off if you're born in a rich group as such, but you may be better off being born poor in Sweden than being born rich in Tanzania. Well, that was not the case 150 years ago.
No, most interesting. You talk a lot about China and India for obvious reasons,
Right.
the size of these countries, their populations, and the effect on inequality. With the unprecedented growth in the economies of these two countries, there has been talk of an emerging middle class. Is that really a fact? What is this middle class? Is it actually growing? And I ask this for a particular reason, because in the case of India, one knows that, of course, while the overall growth rate has been very high,
Right.
you also see
Absolutely.
pockets of abject poverty. Is that middle class, if it indeed is there to the extent that we believe, is that in fact impeding or reducing or increasing the inequality, I'd say, of the poorer class in India?
You see, it's actually, let me refashion slightly the question first to speak of something which recently has acquired a little bit more of importance, at least people have been writing about that. It's so-called, quote-unquote, global middle class. Mm-hmm. Now, it has acquired importance, I think, in popular writings like Thomas Friedman and others. And I think that many of these writings are misleading. I think they're misleading because people go and we are still backward in our sort of thinking that having some relatively cheap physical durables, or it's hardly durable, like cell phones, actually is indication of wealth. We simply did not realize that many of the technical goods, mostly because of China, have become extremely cheap. You know, so it's really, we cannot, I'm very much in favor of cell phones, and I think they do great service to many poor people who are able to have them. But to believe that if I have a cell phone, I become a global middle class, I think it's reasonable. Because at the same time, people might have a cell phone and they may not have safe water, they can hardly survive, they may not be able to send their children to school, they may have extremely vulnerable conditions, they may not have a job, so this is not sufficient. So if we want to talk about a global middle class, then we have to have some definitions. We have to have, if we talk about middle class in a country X, we take some definitions, they exist, sociologists, economists have produced them, and they said, okay, for instance, one of them is take percentage of people who are between 70, around the median income, 20% below, 25% above. Now, in developed countries where there is a large middle class, you'll find about 40% of population in that, around that median. Okay, let's do this for the world. How many do we find? We find 10%. So how much do we find in Panama? We find something like 18. In Brazil, 20%. So the world, if we measure it by world standards, really does not have much of a middle class. Now, if some people, and people have done that, and I don't agree with this, I think it doesn't make sense, they take practically 1/3 of the poverty level in the United States and Western Europe and declare that to be the cutoff point for the beginning of the middle class. I mean, these are people who are practically just above $2 per day, which are considered like an absolute poverty level, and then suddenly they're being pronounced the middle class. So it's only if you take really criteria which are in contrast to what you should do that you discover a sizable middle class in the world. So I'm saying there's basically no sizable middle class as of now. It could change, and of course we know that with India and China, within those countries, there was of course a very great increase in the number and percentage of people who within the conditions of India and China could be called middle class. Not necessarily within the conditions of the world, because the conditions of the world are also determined by the rich countries. But you know, it could change, and of course with growth of India and China it could change. But I think there is a little bit of a too much, as you actually pointed out. You know, in India there are of course not large even pockets of poverty. These are more than pockets. They are like sometimes you can say they are pockets of wealth rather than pockets of poverty. So despite a very remarkable growth in the last almost 15 years, you know, shining India is shining, but there are lots of things which are not shining very much. So I think we should be very careful in projecting, I think, a sort of unwarrantedly optimistic view on that.
Thank you very much. Shall we talk about the current global crisis and the linkages in global inequality and the current crisis? Are there any firm linkages established, and what are the trends, and perhaps some guidelines on when countries move towards greater globalization and openness, what factors should they really look at, which is in the country's interest and in the interest of the world?
You know, I'm of course sorry that to be in many things very tentative, but you know, I did also produce some numbers, so at least you have some hard evidence, which of course one can interpret the way that one likes. But one, of course, a very tentative subject where actually there are no clear answers, I think, is the crisis, the current crisis. And you know, we are now located in Washington, maybe a mile from the White House and Treasury Department, and I really believe that if we went to go there or have them here, they would tell us stories, but I think the bottom line is that nobody knows anything. So that the bottom line is nobody can predict whether it will be 1 year, 2 years, 4 years, and because I think that the economy has become so complex that actually no single individual or a group of individuals are able to fathom out the implications. Now, having said that, of course, it's very difficult then to say how it might impact the global inequality. And I think the only thing that we can do is to look at precedents and to look at how it was during the Great Depression and how it was in the crisis of 1895, and one that I think actually we should pay more attention to was the crisis of 79-81, which of course was for different reasons, but I'll explain why I think it was relevant. Excuse me. So basically, if we go to the Great Depression, the question we can ask, who was more affected? Was it the poor or the rich? Now, the answer there is relatively clear, and this is also what we see now. The first effect of the crisis really is reducing incomes of the rich. So they are real, and the same was true in the Asian crisis, another one that I forgot to mention. So really you have the effects which are not only in absolute amounts bigger for the rich, negative effects, but also in relative amounts, because these are people who have property incomes and of course who have large capitals, financial capital, and they're big losers. The problems become where actually the second order effects come. And in the Great Depression, we see, for instance, in the first 3 years, we don't have that many data points because there are not many countries, but about 30 data points, that the effects of the crisis have been stronger for the richer countries. But in 1933, it actually changes, because the effect of the crisis then became stronger on the poorer countries, mostly agricultural exporters. So my fear is that while these first effects have been very strong on the rich people, in rich countries, the second order effects might actually start being much stronger on either middle class or middle income countries, and then poor countries and poor people. So I would actually see this kind of essentially the reverse trickle down in this crisis, and in that sense actually maybe in about 2 or 3 years we might be in that at the worst position. The second point I wanted just to mention about the crisis of 79-81. Now, why I do believe that it was, why it's relevant today. Obviously, the origins of the crisis are entirely different. But what happened then is something which really determined the developments over the quarter century. Remember, 2 important events happened there. One is the increase in real interest rates, and the second is increase in fuel prices. Now, countries that were heavily indebted, and they were importers of fuel, did not recover from that crisis for 25 years. And that was the reason why Latin America grew at 0%, that was the last decade, why East European countries grew at 0 and actually communism fell, and why Africa went backwards. Now, my fear is that actually this crisis, with some constellation of factors, again, high interest rates or possibly increased price of food, might lead to the similar bifurcation of countries. Some countries that for 25 years may not be able to recover, and others maybe who would actually survive, do well, and after like 2 or 3 years of crisis go up. But I cannot tell, apart now which country is which, because I think that would really depend on how the crisis evolves.
Okay. Interesting. Reading some of your papers, one comes down to a very basic question. And I believe economists and yourself have certain views about it. And that is, does this inequality actually matter?
Global inequality.
Yes, global inequality.
Yes, well, of course, there are some people who say no. And the key reason they say no is they say, well, there is no global government, so who cares? In other words, if there is a government, the government is elected by people, and if there is high inequality in a country, maybe there will be riots, maybe there will be no investments because the property rights would not be secure, maybe the poor people would be outvoting the rich people. So there are some reasons why you should care or worry. But global, they say globally it really doesn't matter. Well, there are of course counter arguments to that. The counter arguments are basically, I would say, 2. One first counter argument is that what happens with globalization and increasing global inequality is that absolute increase of income for the very poor may not be any longer sufficient to make them happy if they see this widening gap between themselves and the rest of the world. In other words, aspirations go up. This is something which we see retrieved from surveys of individuals. People always compare themselves to what is their aspiration level. Well, aspiration level, if you're isolated, is going to be your country or your village. And that we know also historically. There was no inequality I mean, if you look at only at your village, because everybody was equally poor. It's only when you see somebody from the city who is richer that you start thinking about that. So that might actually lead to lots of unhappiness and possible turmoil. And you know what is important there to realize that the process of globalization by itself, by making people realize that, makes it unavoidable. So it's not, you cannot link the two. You cannot say, well, there is globalization and we will trade in goods and we will send capital and of course we will not accept people, but we will do all these other things and then you should not think yourself poor. Well, you have to think yourself poor because you're going to see people who are rich. And the second element then, which goes with that, is the issue of migration. And of course, I alluded to that. I think actually the fact that these large inter-country differences exist, people in rich countries have a huge, what I call citizenship premium. So everything else being the same, you get a huge premium of like, twice the income of somebody else simply because of citizenship. Well, then, of course, what is going to happen is what we're seeing today is actually people would like to become somebody else, which means they would migrate to the rich countries. And that provokes, of course, problems socially for jobs and others that we see. I don't want to go into that topic much, but we can just see it in Europe. We can see it between Indonesia and Malaysia, for example, in Asia. We can see it obviously between Mexico and the building of the Mexican Wall. And we can see it partly with Eastern Europe and Western Europe. So these pressures, and of course Africa and Europe. So these pressures are very real, and I think potentially they are, I don't see exactly how they will be dealt with.
You know, if we project a little bit into the future, and let this be the last question, beyond the present crisis and so forth, do you envisage that globalization would take place and they may lead to a global polity? In fact, is that a possibility, or is that a dream or something we should not aspire for? I'll leave the question open.
Yes, it's a very good question. I actually even wrote something about that. You know, I think that ultimately, but this is, we go, of course, in a very sort of a speculative direction. I think ultimately this, it's not even government, but I would say some global governance will appear, and actually it does appear. I mean, if you go, you have to take a little bit longer perspective on that. And obviously the fact that there is United Nations, that there are many UN agencies, so that there is like much more coordination. Even now it would be about the financial, before it was the Basel rules, that there is lots of WTO regulations. There is clearly much more of governance now than existed 30 or 100 years ago. So I think this trend will continue, but of course we might have problems with how that governance is decided, because it's generally decided by the rich countries, and the participation of the poorer countries, however large they are, has been really marginal until now. Now this might change, as we can see with the greater importance of G20, which now seems suddenly to acquire greater importance than G8, which I think it's a welcome development. So in that sense, I see that these small movements in that direction, but I think that we are not going to see something which is going to be called global government, but we might see some much more of this global governance. And I know that I would definitely sort of look forward to. I would definitely support.
Thank you very much. Branko, that was indeed most informative, and it's greatly appreciated. I think it's given us a lot of food for thought. I'd now like to open up the floor for questions from the audience. May I request you please to have the mic with you before, and to identify yourselves before you ask the question. Thank you.
My question is, have you done any study as to the role of corruption in global inequality, and what role that plays? Thank you.
Thank you very much. It is, again, it's not simply a compliment, but it's really a very good question. I was thinking of that recently, and I even had somebody who is actually done Baker, who has done very important work on figuring out, together now with the IMF, the illegal flows, particularly the illegal flows from the third world countries. But unfortunately, I have to say no, and I will give you the reason. The reason is that all the work that I do, as I explained at the beginning, is really based on household surveys and information that you get about consumption or income of people. And you cannot tell when people tell you, my consumption is so and so, so much, you cannot tell where that money comes from and whether it is illegal or not. But I really think that it is somehow, I really don't see how exactly, but I think it would be very good to sort of marry these two things, you know, global inequality and the global corruption, as it were, because it certainly contributes to global inequality. But I cannot give you a number, I have not done the work.
Any other questions? Yes, please.
Yes, you mentioned.
Ma'am,
Oh,
wait?
sorry.
Oh, yeah,
Okay. My name is Zina. Yeah, you mentioned that historically, I think you gave a date like somewhere around the middle of the 19th century
Right.
to now, where your what you have found out is that inequality has increased. And now I was wondering whether global inequality.
Right.
Between countries. Now, I was wondering whether you've been able to isolate some factors which perhaps might give us some kind of guidelines as to what we can expect in the future, or is that something that, because the future is now, you know, going to be so
Right,
different
right.
from the past? Can we expect some ideas from the studies of history?
Yes, actually what happened over the last 150 years is basically, you can also, I like to compare it with the Big Bang. What happened is at some point, further you go in history, the more that's the case, the countries, income differences between the countries were small. And then with the Industrial Revolution, you had what is also called the Great Divergence. It's actually basically there was a Big Bang. So countries became rich, others stayed where they were, and the differences increased tremendously. Now, what will happen, and of course they increased in such a way, as I said before, that actually from being what I call Marxist in 1850, which means that it was mostly class-driven, they became whatever you want to call them today, but they are really location-driven. And then, what will happen in the future? Well, in the future, what we can say from now is that the big factor for pushing global inequality down is growth of India and China. And as it continues, it would actually probably start overturning. It's still not overturning, but it's kind of almost on the edge of overturning the increasing global inequality and pushing it down. So that's a very good development. The problem first is whether it will continue, because we don't know if India and China will continue growing. Secondly, the problem is that if one of them, let's suppose, goes faster or very fast, it would create big gaps then between, let's suppose, China and Bangladesh, Nigeria, Indonesia, Philippines, who will stay behind. So in other words, China is a factor for good reduction in global inequality for now and maybe another 20 years, but not forever. So that's an issue, you know. So we might actually, we don't know how the future would like, but currently the fact that these two countries are growing fast is a very good news. And actually, as I said, they're on the cusp of starting to reduce global inequality. And it might go on like that for 20 years, and then it might actually change. But of course, that was all on the assumptions that that growth trajectory continues. And of course, that's something we don't know.
Sorry, can I just
Yes,
so add to that? Would the the surplus or the exploitation of surplus or the movement of surplus, would colonialism and the factors that brought about in the rest of the world, would that have any effect on this historical movement, and could that again, where the world surplus is going, which countries are providing resources, or what nature, would that, I mean, you look at it like that at all?
No, that's a difficult question, because actually what you notice, you just look at the facts, and the facts, for instance, are that if you look, for instance, you compare India and England, UK rather, and then of course the gap between them has increased tremendously. I now don't remember the numbers, but certainly it went from like 2 to 1. Actually, some people like Barak believe it was 2 to 1. Madison believes 3 to 1. But they went to actually what is now the gap is in PPP terms something like 18 to 1. So we have to realize how huge these gaps have become. Now, what is the cause of that gap? Did what was called the colonial brain, which means diversion of resources from India, contribute to English growth? Is entirely different problem. So I don't go into that. I just sort of noticed English growth record, but I don't look at the causality behind it.
Please.
I'm a grad student at George Washington University. My question is about how regional integration models is effective in reducing this inequality in the global society.
Okay, if I understand, let me make a guess if I understand correctly, but let me regional integration will be like the European Union.
Yes.
Okay. The European Union is probably the single most, I think maybe the only example on which the so-called convergence is based. Because if you look at the world over the last 25 years or even 50 years, world has diverged. In other words, the differences in incomes between the countries have increased. If you look at the standard deviation of the mean country incomes, if you look at the Gini coefficient, they have all gone up over the last 25 years. For the reasons that I mentioned, Latin America stagnated, Eastern Europe stagnated, Africa went down, a rich world went up. And Asia is interesting because Asia, some parts went up, some parts went down. Because we should not forget that Asia is also home to Laos and Burma and Nepal and countries like that didn't do well. So then the European Union is the only, I think, case where economic and to a large extent political integration has led, and redistribution, because the European Union, as you know, has about 1% of GDP which it redistributes between the members, has led to convergence in incomes, particularly of the southern members like Spain, Portugal, and Greece, who have converged in income levels to the northern members, even in some cases overtaking or sort of having same incomes as the northern members. I think also there is no doubt in my mind that the same will happen with the new East European members. So it is a big example of how an economic, originally a customs union, and of course an economic union, and then a political union with redistribution has helped convergence. Now, if you think of that, so if you look at the rest of the world, then I'll stop there, but you know, US could help convergence of Mexico. You know, the fact that there is this Mexican wall being built is not random. Mexico 30 years ago had an income which is less than 3 times smaller than the US. Now it's 4 times smaller. So if you have a gap of 4 to 1 and you have a land border, well, you're going to cross that land border. So the fact is that actually NAFTA, I think, is too weak. If you compare NAFTA to the European Union, NAFTA is too weak. Actually, if US wanted to help Mexico, then they should give like 1% of GDP to Mexico annually, for example, like the European Union does. So if you want really to bring those up, you have to have some regional type of redistribution. Only trade is not going to do the trick. And you know, we don't see that kind of European Union mechanism anywhere else. We don't see it in Asia at all. ASEAN is, of course, it's a very, very sort of a pale copy of the European Union. So we don't see that willingness. We don't see that willingness of Europe helping Africa either. And that's why they have thousands of people coming from Africa, and which we don't talk because many of them die and nobody cares. But the fact is that they do try to come to Europe.
Please.
From Turkish Embassy, Agricultural Transfer. What were the past roles of the financial institutions like IMF and World Bank and others, and what will be their future role? I would say, in inverted commas, lessons learned. What can be done in the future?
It's a really difficult question for me to say, because of course most of my work has been sort of as explained on global inequality, and rather sort of driven by the numerical findings and so on. I have not really thought very much about their role, and it's our sort of common wisdom changes very rapidly these days. As if we had this discussion about 8-9 months ago, we would be all saying like, well, the fund which had to get rid of 20% of its staff and was lacking money to fund even its ordinary activities because nobody was borrowing from the fund, was in a bad shape, that people were saying, well, that institution, what is going to be the job of this institution? Well, now we are in the exactly opposite situation, that they don't know what to do with billions and billions of money that they need to disperse. Their income probably is going to go shoot through the roof. Like never in history that has happened, in history of the fund. So obviously, from an institution that seemed a year ago to be on the margins of development, now it seems to be the crucial institution. Now, for the World Bank, of course, the change has not been as dramatic because, as you know, it has not been focused only on balance of payment support, but had broader loans and so on. But I would say that actually an obvious thing, which most people, of course, argue, is that these two institutions really have to finally emerge from World War II and to actually acknowledge that things have changed in the last 60 years, which means that actually it is somewhat odd to have constituencies where you have Luxembourg, Belgium, and the Netherlands having more votes than China. And I think that it has to be changed, and I think that it has to be changed not only in the voting arrangement, it has to be changed in accepting lessons of different countries. I don't think we should look at Chinese experience as sort of some kind of odd experience to sort of try to fit within the Russian consensus and the rest just to believe, well, it might happen because it's Chinese. So we have really to integrate that much more. Even East Asian experience, for which the bank had like 15 years ago one report, and that was it. But it was never integrated in the policies. And I think this is very unfortunate, and I think actually in that sense these institutions have to become much more global than they were so far.
Yeah. No, that's interesting. If I can just add to that, it is an important question. And if we look at the role of the World Bank particularly, and the IMF, as the honest brokers, perhaps we also should look at the question of capacity in the developing world to reduce global inequality. What exactly should be the structure of the move towards globalization? How exactly the developing countries should manage? That may be something that these institutions could shed light on much more in the future. But I do see that it is a state of flux right now, and I think all these questions are going to be faced and answered in the coming future. Yes, you had a question, please.
Ismail Tap, University of Maryland. I just want to ask you if you can comment about Obama administration's measures for the current crisis in the United States. There are a lot of criticisms about the way they are distributing the money to the institutions. So can you comment about it, how they handled it so far? Are they on the right track, on your opinion?
Well, unfortunately, really, I have to say that I cannot say anything. It's not that I don't want, but I'm quite sort of immersed in, as you have seen, it's a big topic. So I cannot, this is not my area, you know, financial economics, and I cannot say anything.
Well, thank you very much for the question, and I think your question might be something taken up at one of the next forums. Indeed an interesting question. But that's all the time that we have today. I'd like to thank you, Branko, for very informative. I would also like to thank the audience for being with us, and for the viewers back home. Thank you for being there, and we look forward to seeing you again at the next Rumi Forum luncheon.
Thank you.